What if everything you've ever been told about the stability of money is nothing more than a temporary illusion? While paper currencies drift at the mercy of politics and inflation, there is one asset that remains unmoved, silently watching the rise and fall of empires for millennia. Gold doesn't lie. It doesn't go bankrupt. And above all, it is the only refuge that survives when the financial system faces collapse. But the real story isn't found in the gold we see on charts or in display cases. The real story belongs to the gold that is deliberately hidden in the shadows. If this kind of deep investigation resonates with you, and if you also sense that there are pieces of the global puzzle being kept from us, I invite you to hit the like button and subscribe to the channel right now. Your engagement here is much more than just a click. It gives us the strength and resources to continue shedding light on topics that global elites would prefer to keep in the dark. If this makes sense to you, share it in the comments. Do you fully trust the current system, or do you feel a shift coming? Your voice is essential for the growth of this community, because what we are about to reveal suggests that the world's most powerful nations have entrusted the system for a long time, and what they are doing, far from public view, has the potential to rewrite the history of global wealth. Pay close attention. Case 1. Underreported gold reserves. The official numbers we see stamped on World Gold Council reports or International Monetary Fund publications act, in practice, as a sedative for public opinion. They offer a sense of order, transparency, and control, painting a world map where we supposedly know exactly how much each nation holds in its vaults. However, to understand the true dynamics of global power, one must accept an uncomfortable premise. These numbers are largely a piece of bureaucratic theater designed to maintain the status quo, while behind the scenes, the reality is drastically different. The hidden truth about state reserves is that gold reporting is a voluntary act of self-disclosure, not a rigorous, independent audit. There is no international police force entering the high-security bunkers of Beijing, Moscow, or even Washington to count bar by bar. What exists is a diplomacy of appearances where what is shown is just enough to maintain credibility in the fiat system, while the true volume of real wealth is kept off the books, far from prying eyes and market speculation. This deliberate concealment is not an accident. It is a strategy of survival and domination. Think of this as a silent war mentality. If a nation reveals the totality of its gold reserves, it also reveals the extent of its capacity to withstand a dollar collapse or severe economic sanctions. By keeping the true quantities in the shadows, these countries preserve the element of surprise, a tactical tool used by generals and emperors throughout history, but now applied on the financial chessboard. The impact of these decisions is immeasurable, as it suggests that the power shift we all intuitively feel happening has effectively been funded and secured long ago. It just hasn't been officially announced yet. We are talking about a geopolitical transformation that doesn't happen on podiums or at televised summits, but in the cold silence of underground vaults that appear on no public registry. To operationalize this secret, states utilize sophisticated mechanisms. The gold is not bought directly by the central bank, where it would have to be declared on official balance sheets. Instead, the metal's journey passes through sovereign wealth funds, state-owned commercial banks, intelligence agencies, and even mining companies instructed not to export their production, but to channel it internally into undeclared strategic reserves. It is a game of smoke and mirrors. China, for example, is the world's largest gold producer, yet it rarely exports a single gram. Where does all that gold mined year after year go? It vanishes into the intricacies of a parallel accounting system, accumulating silently, creating a mountain of real value that vastly exceeds what Western charts show us. These revelations change how we look at the supposed fragility of certain economies. They may seem fragile in paper currency, but they are armored intangible assets. This stealth accumulation is proof that the elites managing these countries do not trust the system they help perpetuate for the mass. While the population is encouraged to save in fiat currency that loses value every day, the state protects itself with the only asset that cannot be printed. It is a cruel duality, illusion for the people, solidity for the power. Understanding this is fundamental for anyone who wants to protect their own wealth, as it shows that the rules of the game differ depending on which side of the table you sit. It is not just about economics. It is about sovereignty. Whoever holds the undeclared gold holds the ability to reset the system on their own terms when the moment is right. It is a slow, patient, and calculated preparation for a day they know is inevitable. And if you have made it this far in this analysis and realized the game is much deeper than it seems, write the phrase "hidden gold" in the comments so I know you are part of the group that seeks to see beyond the curtain. Now, I want to go even deeper into this subject. Case 2. Gold leasing and paper gold illusions. For the vast majority of investors and common citizens, The word gold evokes immediate images of solidity, of heavy, gleaming bars guarded under maximum security, untouchable and eternal. However, as we enter the intricacies of the modern financial system, we encounter a reality that is far more fluid and disturbing, where the solidity of the metal is replaced by the fragility of a promise. This is the world of paper gold illusions, a sophisticated mechanism created behind the scenes of the great financial hubs of London and New York to control the perception of value and manage mass psychology. The hidden truth that few dare to discuss openly is that the gold market we see on the news and trading platforms is not the market for physical gold. It is, in its essence, a market of derivatives, futures, contracts, and deposit receipts that outnumber the quantity of actual metal by a frightening ratio. It is estimated that for every ounce of physical gold existing in the vaults of the COMEX or the LBM, there are hundreds of ounces of paper gold being traded, bought, and sold every second. This disparity creates a monumental distortion in price discovery, allowing the value of gold to be artificially suppressed through the unlimited issuance of contracts that never intend to be converted into physical metal. This financial engineering is not a bug in the system. It is a feature designed with precision. Decisions made by banking elites allow for the practice of rehypothecation concept, the leasing and selling of the same asset to multiple parties simultaneously. Imagine you deposit a gold bar in a bank. That bank, in turn, leases that bar to another institution, which sells it on the open market, all while your bank statement continues to say the gold is there. In practice, a duplication of supply has been created, an invisible inflation that keeps prices controlled and prevents gold from skyrocketing as the true barometer of fiat currency devaluation. It is a risk management mentality that sacrifices the integrity of the asset to maintain the stability of the paper system. This journey of gold, from the mine to the vault, is interrupted by a labyrinth of financial instruments that dilute its real impact on the global economy. The result is a collective anesthesia, where the public believes gold is just another commodity that goes up and down and down, without realizing its price is being managed to conceal the inflationary fever corroding the money in their pockets. However, this suppression strategy has an unintended and deeply transformative side effect. It allows those who know the game to accumulate physical gold at bargain prices. While the West trades paper and celebrates digital profits, the East and the smart money demand physical delivery. We are observing a historic transfer of real wealth, where gold bars are physically traveling from vaults in London and Switzerland to China, India, Russia, and Turkey. These buyers are not interested in contracts. They want tangible possession because they know that in a systemic crisis scenario, the paper market will vaporize when the music stops and all receipt holders demand their gold at the same time. The revelations will be catastrophic. There won't be chairs for everyone. The fractional reserve system applied to gold works only as long as trust remains intact. The moment doubt sets in, the run on the vaults will expose the void that sustains the current market. It is fascinating and terrifying to realize how this structure remains standing. It depends entirely on complacency and ignorance regarding the difference between property and promise. The transformation occurring now is silent, but relentless. Physical gold is being drained from the system, leaving behind only the husk of derivatives. Those who hold the paper will be left with the promise. Those who hold the metal will inherit the power. This is the invisible dynamic defining the future of global wealth. If you can perceive the vital difference between having an asset in your hand and having a contract on a screen, and if this analysis has made you question the safety of your own investments, write the phrase paper illusion in the comments so we can mark the presence of those who are not fooled by the appearances of the financial market. Now, I want to go even deeper into this subject. Case 3. Strategic gold buying during crisis. Chaos is, paradoxically, the best ally of those seeking to consolidate control. When we observe the global landscape during moments of acute crisis, whether a pandemic, a regional war, or a banking collapse, instinctive reaction of the majority of investors and the general public is panic. It is a biological response, the fear of immediate loss that clouds reasoning and precipitates emotional decisions. However, it is precisely in these moments of turbulence, when the smokescreen of uncertainty is thickest, that we witness the most aggressive and calculated maneuvers by nations that understand the true nature of money. The strategy of buying during crises is not merely an investment tactic. It is an operation of economic warfare conducted behind the scenes, far from the sensationalist headlines that distract the masses. While the news focuses on falling stock indices and currency volatility, Eastern central banks and emerging powers activate silent protocols of massive physical gold accumulation, leveraging the liquidity generated by others fear to absorb real assets at discounted prices. This predatory and patient mentality reveals a deep understanding of historical cycles. The elites governing these nations know that trust in fiat systems is cyclical and fragile. When fear sets in, the price of paper gold often drops initially. dragged down by the need for liquidity from large funds, selling everything to cover margins. Here lies the great opportunity and the great trap. For the common investor, the price drop is a warning sign to sell. For the strategic state, it is the green light to buy. This divergence creates a generational wealth transfer, where gold leaves weak hands, speculators, and short-term investors and migrates to strong hands, sovereign entities with no intention of selling for decades. It is a silent transformation of global ownership, where the world's safest asset is consolidated by those with the capacity to wait out the storm. What makes this movement even more fascinating are the revelations about how these purchases are structured to avoid alerting the market. Unlike a private investor going to a broker, states use opaque channels. Many countries with domestic gold production, like China and Russia, have simply stopped selling their gold on the open markets of London or New York. Instead, they have de facto nationalized their production, buying the metal directly from local miners with their own printed currency. This has a dual impact. It removes supply from the global market, creating a long-term physical scarcity, and allows them to convert fiat currency with no intrinsic value into an eternal reserve asset without ever needing to touch the US dollar. It is a masterstroke happening entirely off the radar of Western monitoring systems. They are trading printed paper for real sovereignty, preparing for a scenario where the rules of international trade may be This journey of accumulation during chaos has proved that these actors are not playing the same game as us. While the public discusses this month's inflation or the interest rate of the next meeting, the holders of real power are positioning themselves for the end of the current cycle. They understand that when the dust settles and trust in paper currencies is irreparably damaged, whoever owns the physical gold will dictate the terms of the new financial architecture. The hidden truth is that crises are not accidents that catch these governments off guard. Often, they are the catalysts they await to execute their most voluminous acquisitions, without raising suspicion. Gold bought in the silence of panic is worth far more than gold bought in the noise of euphoria, because it carries the weight of stability when everything else fails. If you can see the cold, relentless logic behind this strategy and understand that the moment of greatest fear is, in reality, the moment of greatest opportunity for those who are prepared. Write the phrase "strong hands" in the comments, so we can identify those here who have the vision necessary to withstand the market's emotional manipulation. Now, I want to go even deeper into this subject. Case 4. Why gold still decides the future. In the vast tapestry of human history, there is an inexorable constant that challenges the arrogance of modern economists and the volatility of government policies: gold's ability to survive the death of the currencies that attempt to replace it. We live in an era of unprecedented financial experimentation, where wealth is often confused with debt, and where prosperity is measured in digital units created out of thin air. Oh, baby, the reason gold continues to decide the future is not because it is a barbarous relic, as many technocrats like to claim, but precisely because it is the only global financial asset that is not someone else's liability. When you hold a treasury bond, you hold a government's promise to pay. When you hold a bank deposit, you hold a promise of solvency from a bank. Gold, in its physical and sovereign form, depends on no promises, requires no signatures, and obeys no borders. It is the very embodiment of independence, a hidden truth that the architects of the current monetary system desperately try to obscure. The transformation we observe today in the geopolitical landscape is, in essence, a silent race to see who can accumulate the greatest amount of this, and countries seeking to challenge Western financial hegemony are not buying gold to speculate or to turn quarterly profits. The mindset here is of a completely different order. They are accumulating metal to earn the right to sit at the table when the rules of global trade are History teaches us that in moments of systemic reset, when trust in paper currency evaporates due to hyperinflation or war, the new system is invariably built upon the shoulders of those who hold the gold. It is gold that provides the anchor of credibility necessary for a new currency to be accepted. Therefore, the nations dominating the physical flows of the metal today are not just hedging, they are buying votes in the future financial parliament of the world. This is one of the most strategic decisions a state can make, trading the immediate convenience of fiat currency for the eternal authority of the metal. The impact of this dynamic is profound and often invisible to the average citizen, who remains focused on the daily volatility of stock markets. Behind the scenes, however, gold functions as a political lie detector. It exposes fiscal fragility without speaking a single word. When the price of gold rises in a certain currency, it is not necessarily the gold that is becoming more valuable. It is the currency that is becoming worth less, revealing the silent erosion of purchasing power that official inflation indices try to camouflage. Global elites understand this perfectly. While they publicly defend the robustness of the digital banking system, privately they convert their surpluses into physical bars. perpetuating a journey of financial hypocrisy where the rules applied to the population differ drastically from the rules applied to the holders of real power. Gold remains neutral, apolitical, and unforgiving. It does not care who the president is, what the dominant ideology is, or what laws are passed. It responds only to the reality of supply, demand, and monetary debate. This neutrality is what makes gold the ultimate tool of freedom and sovereignty. In a world where bank accounts can be frozen with a click and where transactions can be censored by algorithms, physical gold represents wealth that cannot be remotely deleted. The revelations about the vulnerability of digital money, especially in times of geopolitical conflict, have brought gold back to center stage, not as an antiquated investment, but as the most advanced security technology in existence, one that requires neither electricity nor the internet to function. Those who understand that the future will be defined not by who prints the most money, but by who holds the soundest collateral, have already positioned themselves. They know that when the music stops, gold will be the only judge left in the room. If this reflection on the permanence of gold in the face of the fragility of empires has changed your perspective on what real money is, and if you understand that true wealth cannot be printed, write the phrase absolute sovereignty in the comments so we know you understand the true weight of what is at stake. Now, I want to go even deeper into this subject. They say gold is a relic of the past, but the silent actions of the most powerful nations tell another story. Take note that, in the end, paper money is merely trust, while gold is absolute certainty. The true secret is not who has the most, but who has the courage to prepare for the inevitable while the rest of the world sleeps. If this journey behind the scenes of global wealth has brought clarity to your vision, consider subscribing to the channel. It is the most sincere way to support this kind of deep investigation and ensure you don't miss the next revelations. Hit the like button if you feel we connected important dots today. And since you stayed until the very last second, show that you are part of the vigilant few. Write real vision in the comments and stay curious.